Hi everyone, this is Dan with Theta Trend. Today is Tuesday, January 19th. It's about 2:30 p.m. here, Mountain Time. The market closes 2 p.m. Mountain Time, so it's been closed for about a half hour. In this video, I wanted to talk a little bit about what we're seeing in the Russell 2000 and also about the entry for the March CIB trade. I got involved in a new trade today with about 59 days to expiration. So we'll walk through what the market's doing and then take a look at that position as it relates to the market. So what we're looking at here, this is a longer term chart of the RUT, and it's a weekly chart. And we're going back here all the way to 2009. So this was following the 2008 crash. Let's see if I can scroll over there a little bit. So there's the crash in 2008, just to show you where we are for context. This is the low in '09. And from there, I've drawn this trend line along a couple of points that the Russell has come down to touch the trend line. And with this most recent little tumble lower, we've actually broken through this trend line. And so the only reason I think that this is maybe significant is just that maybe what we're going to see in the market, so we've had this big sell-off that started right here around this 1100 level. And from there, it's just been kind of persistently lower. You can see here that the rate of descent seems to have slowed a little bit, but the market is still really declining. And one of the scenarios that I kind of anticipate or wonder about is the potential for the market to make a rally up to this trend line, fail there, and then head again lower. And that's a possibility. We don't know what's going to happen, but it's just something to be aware of more than anything. So from the weekly time frame, we'll drop back down to the daily. And we were watching this range here, sort of the 1100 to the 1200 range for some time in the Russell. And when this level broke here, the market headed south pretty quickly. And since that time, we've just steadily grinded lower, lower, lower. And the Russell is certainly weaker than the S&P in here at this point. But at any rate, what we're starting to see is, again, this slowing in the downtrend. You have a little bit of buying happening here where we see these tails on the candles and things like that. And so, I'm not exceptionally bullish here or anything like that, but it's just something to be aware of, that the rate of descent seems to have slowed, at least temporarily. Another possibility is that there will be a big flush lower. We certainly don't know what's going to happen, but it's just the descent for the time being has slowed a little bit. And just for context, what we're looking at here is you can see these two green bars. The one here, that's at about 1040, and the other down here at about 960. Those represent the expiration break-even points of the butterfly that I entered today. And so we'll come back and talk about those, but that's what we're looking at there, just so you're aware. And from where price closed today down here at 995, basically, this is up about 1040. So there's a little bit of room to work to get back up there, but the market's been moving quite a bit, so it could quickly get up there. We don't know, or it could quickly get down to the lower break even as well. So now we've dropped down even more, and what we're looking at is an intraday 65-minute chart of the Russell 2000. The yellow line here is the 5-day simple moving average. The red line is the 10-day. And so we just watch these to give ourselves an idea kind of what the intermediate term trend is. And when we look at these, it's pretty clear that the intermediate term trend is lower. We have declining 5 and 10-day moving averages. The market is failing to get back above them to make any sort of strength or anything. What we see here is it sort of starts to try to firm up, and then it fails. We never get that. You will never get that higher high, and then we get a new lower low. You get a lower high followed by a lower low. And we now have this situation here where the market's starting to, it seems like, come into a little bit of balance. And all I mean by that is that it's starting to trade back and forth around some prices here. The central price here is kind of like around 1010, I guess you would say, something like that. And it seems like when the market was up there, it sold off through that level. It got down here, it was bid back, it failed, and it tried to come back a little bit here at the end of the day, but it didn't quite make it. So at any rate, what I'm looking at is essentially a decline that seems to be slowing a little bit, but it hasn't reversed by any means, and the market is still in a period of decline. It's just that the speed has slowed down a little bit. So at any rate, I mean, the bigger picture is that we're 59 days from expiration, and so it was time to get involved in the next trade. And so I guess actually 58 days here. So what I have is I entered this position earlier this morning when the market was higher. And at that time, I was hoping to get a little bit of a push higher up into the 1020s so that I could buy the 1010 butterfly, but that didn't quite happen. So what I ended up with is the 950, 1000, 1050 RUT butterfly with, I guess, the 104 IWM call here. So you can see that as well. And I paid 9.25 for the butterfly, and I paid $218, I think, for the call. So the total debit's around $1,200 or so to get involved in the trade. And you can see here the market closed today at about 994. There's never really anything to say immediately after a trade is entered because there's not a lot of directional risk. We can see the Greeks here right now. The delta is 118, gamma is -4, tiny bit of theta, negligible really. Short some vega, and there's this small open profit, but essentially zero on the first day if you think about it. So that's all I have for today. If you have any questions, feel free to shoot me an email, info@thetatrend.com. Thanks for watching.